Yes. See now. Now we are going to discuss problem number 10. Till now we have discussed 9 problems. So now we are going to discuss problem number 10. See this problem. Ashish Limited issued Ashish Limited issued 2 lakh debentures. 2 lakh in 5% debentures of 100 each at par and repayable at the end of 5 years at a premium of 6%. That means here issue value is directly given in the question. Issue value is directly given in the question. That is 2 lakh in 5% debentures of 100 is directly given. That means company at the time of borrowing the loan. That means debenture holders will subscribe the debenture and company will get required amount. So it is one kind of loan to the company, isn't it? For that company is going to pay fixed interest. Fixed interest rate company is going to pay. So now 2 lakh is a debenture amount we know and it is repayable at the end of 5 years at a premium of 6%. So now, after the expiry of 5 years, company is going to pay more amount. More amount. Why company is going to pay more amount? See this. Issued at par and redeemable at premium. So, redeemable at premium means how to calculate. So, 2 lakh is a debenture value. Premium of 6%. 2 lakh into 6% if we do. 2 lakh into 6% if we do. In that case, what happens? You will get premium amount. So what is our premium amount? Premium amount will be 12,000. 2 lakh into 6% is 12,000. So see this. After the expiry of 5 years, company is going to pay 2 lakh par amount plus 12,000 premium. So total amount is 2 lakh 12,000. So what happens? Actual amount received or actual amount borrowed by the company is 2 lakh. At the time of after the expiry of 5 year, company is going to pay 12,000 extra. So it is whether it is a loss or profit to the company. It is the loss to the company. Why it is a loss to the company? Because company is going to pay extra amount, or company is going to pay more amount. That is why it is the loss to the company. Yes. So now next thing, a debenture redemption fund at 4% compound interest is to be created. Okay. So now you are required to prepare sinking fund. Debenture redemption fund is nothing but it is a sinking fund that you need to prepare 4% compound interest. That means interest on investment is mentioned in the problem. Rate of interest on investment is mentioned in the problem. That is 4%. Yes. So now you are required to prepare debenture redemption fund account and debenture redemption fund investment account for 5 years. So in this problem you are going to prepare only two accounts. That is our second and third account. Till now for 24 marks problem and all we prepared all the 5 accounts. That is debenture account, then debenture redemption fund, then debenture redemption fund investment, then bank account, then debenture holder account, and if required, redemption premium account also we have prepared. Yes. So, but in this problem only two account, but annuity table value is given. Annuity table value is given. See this. For rupees 1 per year at 4% compound interest amount to 5.4163 in 5 years. Okay. So for 1 rupee 5.4163 is to be kept aside. Then for what amount? What amount means total amount paid by the company to the debenture holder. For that amount, how much we are going to keep aside from profit and loss account? That we need to calculate. How to calculate? For that we are going to do one working note. Working note we need to do. See this. Now, this is a simple question. So now we can easily prepare these two accounts. See this. So now we need to discuss about notes. The entries for 5 years should be prepared in the above mentioned two accounts. Okay, that is fine. Calculation of amount to be appropriated. So in this, rupees 1 annually becomes 5.4163. That is given in the question. Total amount paid by the company I have already told. That is 2 lakh debenture plus 12,000 premium. How 12,000 premium? 2 lakh into 6%. See this premium information is given. So that is 12,000. So cross multiplication we need to do. For 1 rupee 5.4163 for 2,12,000 how much? But why we have written 2,12,000 under 5.41? I have already told this. Whenever there is a more value, under that we are going to write. Or else you want to get P&L appropriation amount. So if we write 2,12,000 this side, 2,12,000 this side, then what happens? That is under 1. In that case, what happens? 2,12,000 into 5.41, of course, it will be more than 10 lakh. Of course, it will be more than 10 lakh. So, it is not possible because our debenture plus premium value itself is 2,12,000. So, that is why we are writing it under more value. Writing it under more value. Here, more value is 5.41. So, below that, you need to write 2,12,000. Now, you do cross multiplication. 2,12,000 into 1 divided by 5.4163, that is 39,141. So what is this 39,141? So this is the P&L appropriation amount. This amount you need to keep aside every year from P&L account. So now we are going to prepare this one debenture redemption fund and investment account for 5 years. That means for 5 years we need to prepare ledger account. Only two accounts for 5 years we need to prepare. Yes. So books of Ashish Limited. First one, debenture redemption fund account. So if we know that debenture redemption fund account has credit balance. So in the credit side we are going to write first year by profit and loss account. Why we have written first year? Because here no date is mentioned in this question. There is no beginning date, no ending date. That is why we need to write in terms of year. For first year entry we need to write under date column first year. For second year entry second year, like that. So now for the first year by profit and loss account, if date is given, when you are going to write this entry at the end of first year, at the end of first year. So that is 39,141. So that is profit and loss account credit side. In that year no other balance, so two balance carry forward. 39,141 first year entry is over. There is no interest because there is no opening balance in the first year. Now you come to the second year. Second year, again by balance brought forward, that is previous year closing balance will become the opening balance of second year. Now on the opening balance you need to calculate interest. Why we are going to calculate it on the opening balance? Because there is no face value. No face value is given in the question. That is why we are going to calculate on the basis of opening balance. See this 39,141 into 4% if you do, you will get 1,566. And profit and loss account is same for every year. That means this amount you need to keep aside every year. That is profit and loss account debit to debenture redemption fund account. That is why we have written by profit and loss. So now we got second year total 79,848. So no other entry in the debit side. So two balance carry forward. Two balance carry forward 79,848. That is for the second year. Now we need to do it for the third year. Write down the balance. Previous year closing balance will become the opening balance of the third year, that is 79,848. Again we need to do interest calculation on the opening balance of that year. That year means year third year opening balance. What is our opening balance? 79,848. So on that you take 4%. So you will get interest as 3,194. Then profit and loss account as usual. For every year it is there. 39,141. So total is 1,22,183 for the third year. No other entry close the third year. Two balance carry forward 1,22,183. Now we need to do for fourth year. Like this we are going to do till fifth year. So fourth year opening balance 1,22,183. Then after that interest calculation, same thing on the opening balance of fourth year. See, opening balance is 1,22,183 into 4%. If you do, you will get 4,887. Profit and loss account is same for every year. Total is 1,66,211. Close the fourth year. Close the fourth year. Very simple. Same repetitive entry we are going to do. Same repeating entry we are going to do. So now fifth year. Now we are going to do it for fifth year. Fifth year opening balance is 1,66,211. This is a closing balance of previous year if we have brought forward for the fifth year. Last year, fifth year is our last year. So on that you take 4% interest on the opening balance, you will get 6,648. Then profit and loss account is there, that is 39,141. That is nothing but working note number 1, P&L appropriation amount. So total of the credit side is 2,12,000. Debit side, now you don't write information. Leave this account as it is. Then later on we'll come back to this account. Now we will move on to next account. What is our next account? In this sum only two accounts. So next account is debenture redemption fund investment account. So in this account, you know, investment as debit balance. So start from debit side. Debit side start. So first year two bank account. Again here there is no date given. That is why we have written year. Two bank account 39,141. Why only 39,141? Because in the first year there is no interest. So that is why we are going to write only P&L appropriation amount. So that is the first year. Close the first year, no other entry. In debenture redemption in investment account. So close the first year. Now we are going to come to the second year. Second year, two balance brought forward. So this is again previous year closing balance we have brought forward 39,141. Now it is very important. Second year there is interest as well as P&L appropriation amount. In the second year, there is interest as well as P&L appropriation amount. So, how to calculate interest? Either you calculate on the opening balance or you can see the previous account. What is our previous account? Previous account is debenture redemption fund account. See the debenture redemption fund account for the second year. See this, in the debenture redemption fund we have written 1,566. That is second year interest. Same interest you are going to write in debenture redemption fund investment account plus. See this, we have written interest plus P&L appropriation account. Interest plus P&L appropriation account. Total you will get is 40,707. So total of the second year is 79,848. No other entry in the credit side of investment account. So close the second year. By balance carry forward. Like that we need to do it for all the remaining year. Two balance brought forward for the third year, you know. Bank account again same procedure. Interest plus P&L account. Interest either you can calculate on 79,848 or you can see the previous account. Previous account third year if you see you will get interest, and P&L appropriation account is same, that you know, for same every year it is same. So add both and write the total. Two bank account. So what is this two bank account? Two bank account is nothing but whenever we are making the investment, what is the journal entry? Debenture redemption fund investment account debit to bank account. That is the journal entry or accounting treatment. That is why we have written two bank account. And in the debenture redemption fund, why we are writing buyback? Buyback we are writing because it's a simplified journal entry. Bank account debit to debenture redemption fund. That is why we are writing buyback in second account. Yes, now close the third year. No other entry. Close the third year. That is 1,22,183. So there is no other entry in the credit side. So now we'll move on to the fourth year. Fourth year opening balance we know. Previous year closing balance. That is nothing but this balance. See this third year closing. Next again two bank. How we are going to do? Interest of the fourth year plus P&L appropriation. Interest of the fourth year plus P&L appropriation account. What is our total? 44,028. Yes. Now close the fourth year. Fourth year total we know, no other entry. 1,66,211. Now last year. Now fifth year is our last year. Last year there is no interest in the DRFI account. Why there is no interest in DRFI? Because at the end of last year investments are sold. That is why actual amount we know. Actual amount means balance available at the beginning or at the end of that particular year. That is 1,66,201, 211. Now sale. Now we need to make the sale. Whether there is any information is given in the question about sale. Once we need to go through the question again. Whether there is anything mentioned about sale. No, they have not given any information regarding sale. So what happens? It is assumed that investments are sold at par value. What do you mean by par value? Par value means whatever the actual amount, to that amount itself the investments are sold. That means, see this is the actual amount, available amount, same amount investments are sold by bank account. Why by bank account? Whenever investments are sold, bank account debit to debenture redemption fund investment account. So sale of investment. So in here there is break even point. What is the break even point? Break even point means there is no profit, no loss. Since there is no profit, no loss, what happens? There is no transfer entry. There is no transfer entry in debenture redemption fund account. So we will close the debenture redemption fund investment account, that is 1,66,211. Now we will again go back to the first account, that is our debenture redemption fund account. There we have not written this information. So now we are going to write this information. What is this first information? At the end of fifth year, to loss on issue of debenture. How to calculate loss? Loss is nothing but premium. What is the premium rate? Rate is 6%. What is the debenture amount? 2 lakh. 2 lakh into 6% if you do, you will get 12,000. That is premium. It is a company is paying more. It is a loss to the company. 2 loss on issue of debenture. 12,000 debit side of DRF. So now we know the total credit side total is more than the debit side. So 2 lakh 12,000 is in the both the side. From 2 lakh 12,000 deduct to 12,000. Why we are deducting 12,000? Because it is a loss. It is a loss. That is why we are deducting 12,000. So if you deduct 12,000 from 2 lakh 12,000, you will get 2 lakh. So that is unutilized amount. That is remaining amount in DRF. And you know remaining amount in DRF account is transferred to general reserve account. General reserve account, that is our balancing figure. Balancing figure 2 lakh. Yes. So now we closed debenture redemption fund account also. Very simple problem. No adjustment at all. Only two accounts you need to prepare. So have you understood this one? It is similar to the previous problems, but the only thing is here you need to prepare only two accounts. That's it. No other calculation, no other adjustment. So any doubt regarding this question? Any doubt regarding this one? This is a 12 mark type of question. 12 mark question. Yes. So any doubt regarding this one? This question. Question number 10. Or anything regarding this chapter. Regarding this chapter, any doubt you can ask me now. Any doubt regarding this chapter? Yes. Do you have any doubt? Anything you want to ask, you can ask me now. Unmute yourself or comment in the chat box. Yes. Tell me. Any doubt? No doubt? No one is answering, no doubt? See, it is very simple. It is very simple. I have already told this. If you know the accounting treatment, then it will be very easy to solve the problem. Yes. So I hope there is no doubt in this problem. This is similar to the previous problem. Yes. Now last problem of this chapter. Last problem of this chapter we are going to see. This will be the 6 mark problem. 6 mark problem, this type of problem. Now what we are going to see, that is a 6 mark problem. Similar type of problem is repeatedly asked in examination. So that we are going to see now. Last problem of this chapter. Yes. So now we will see 11th problem. Problem number 11. See this. On 1/4/2011, Shan Limited issued 7,009% debentures of 100 each. Okay, so now what is the debenture value? 7,000 into 100. So what is that amount? 7,000 into 100 if you do 7 lakh. 7 lakh is a debenture value. Repayable at the end of 4 years at a premium of 5%. Okay. So here one thing is very clear. Issued at par, redeemable at premium. Premium of 5% means on 7 lakh if you take 5%, you will get premium amount. Okay, that means here again there is a loss. Why again there is a loss? Because company is going to pay extra amount to the debenture holder. That is why there is a loss. What is the loss amount? How to calculate the loss amount? Total par value plus premium amount minus the par information, that is 7 lakh plus 7 lakh into 5% minus 7 lakh. you will get the this one, loss on issue of debenture. Yes, it has been decided to institute fund for that purpose. Okay, the investment being expected to earn 4% net, that is rate of interest is given 4%. Fund table shows 0.235490. Invested annually amounts to rupees 1 at 4% in 4 year. Investment realized 98% net. Okay, so there is a loss. There is a loss. Why? Because it is less than 100%. Investment realized 98% net means it is less than 100%. Yes. Whether my voice is audible now? Can you tell me whether my voice is audible? Whether my voice is audible? Can you tell me? I lost the connection. Can you hear me now? Properly, can you hear me, right? Yes. No problem. I lost the connection. That's why I asked. Yes. So now we were talking about last problem in this, how to calculate this one, loss on issue of debenture. We have discussed. See how to calculate premium, total premium, par plus premium minus par value. We will get loss on issue of debenture. Then investment realized 98% net means there is a loss. How there is a loss? That is less than 100%. So there is a loss. Prepare debenture redemption fund only one account for 4 years. But what is different in this? Difference is without preparing DRFI account, how you are going to show entries in the DRF account last year? Without the preparation of DRFI account, how you are going to show entries in DRF account last year? That we are going to see in this problem. So all other things are same. So now we are going to discuss this. See this. Directly we need to calculate amount to be appropriate. That is the first step. This is a 6 mark problem, very simple. For 1 rupee 0.235490 to be kept aside. For 7 lakh 35, how much? How we got 7 lakh 35? 7 lakh is a par value plus premium. 7 lakh into 5%. 7 lakh into 5% is 35,000. So total 7 lakh plus 35,000. 7 lakh 35,000. So why we are going to take a premium also? Because company is going to pay premium plus par value to debenture holder. That is why we are going to consider premium also. Yes. So now do the cross multiplication. You will get the value as 1,73,085. 1,73,085 is your amount to be kept aside from profit and loss account every year. So this is a simple step. After that, directly prepare debenture redemption fund account. Debenture redemption fund account we need to prepare in the books of Shan Limited. We know that as credit balance, so start from credit side by P&L. P&L value is nothing but working note. Working note number 1. Yes, 1,73,085. No other balance. Close that year. Close that year. And date is important. Why we have written year end? Because what is the issue date? Issue date is 1/4/2011. And so 1/4/2011 means year 2011-12. So when does that year 2011-12 start? It starts from 1/4/2011 and ends on 31st-3/2012. So that is actually a financial year. Financial year. That is why at the end of the year amount we are keeping aside. So date is at the end. Okay. So now second year. Second year again by balance brought forward, same thing, previous year closing balance. Now interest calculation. How to calculate interest on the opening balance? We know on this balance, opening balance of second year, 1,73,085 into 4%. That is 6,923. Profit and loss account same for each year, that we know. Then total of the second year is same. Total of the second year is same, and close the second year. Close the second year, that is 3,53,093. Now third year, again third year we need to do same procedure. Opening balance, on that calculate interest. Interest value is 14,124. That is on 3,53,093 into 4%. Then profit and loss account same, 1,73,085. So total of the Third year is 5,40,000, 5,40,302. Yes. Now last year, very important. In this problem, important thing is last year. Last year, without solving DRFI account, we are going to pass entry. How to pass entry? We need to see now. See this last year opening balance we know that is 1/4/2014. 1/4/2014 balance we know. How we know that balance? Because this is the previous year balance. Previous year balance will be our opening balance. 5,40,302. Next step is bank account interest. That is same. 5,43,002 into 4%, 21,612. That is same for every year. Profit and loss account also same. But here we have written 1,73,086. Here we have written 85. So because just to make it round figure, we have taken one extra. Just to make it round figure, we have taken 1 rupee extra. So either you can adjust that 1 rupee in P&L account, or you can adjust that 1 rupee here in interest calculation. Yes. So now we know the credit side total of the last year, that is 7,35,000. Now debit side. How to write debit side? How to write debit side? In debit side, if you see investment realized 98% net. Investment realized 98% net. So what happens? Here there is a loss. Directly we can say here there is a loss. How we know that there is a loss? Because here investments are sold less than 100%. Less than 100% means less than the par value. That means there is a 2% lesser amount. 2% lesser amount is there. So there is a loss. So whenever there is a loss, now you imagine DRFI account. Now you imagine DRFI account. That is third account. So whenever there is a loss, what we are going to write in DRFI account? That is by debenture redemption fund account. That is by debenture redemption fund account in DRFI account. So what is the journal entry? Debenture redemption fund account debit to debenture redemption fund investment account. So that is the journal entry when there is a loss. But now we know there is a loss. So directly, if we write buy in debenture redemption fund investment account, of course transfer entry will be 2. Transfer entry will be 2. That means credit side of the investment account becomes debit side of the DRF account. That is why here 2 entry, 2 debenture redemption fund investment loss on sale, that is 5,40,302 minus 5,40,302 into 98%. Why we are doing this step here? Or else how we are going to do in the previous problem we have seen. In the third account, by bank account we have written. In the DRFI account, that is credit side, there we used to write sale amount, bank to investment sale amount. So that procedure you need to show it here itself. Because we are preparing only one account. 5,40,302 minus 5,40,302 into 98%. So what is the difference amount? You will get the difference amount, that is our loss. 5,40,302 minus 5,29,496. Difference amount is 10,806. This is a loss. Loss on sale. So in this question, what is the actual amount? Actual amount is 5,43,002 is the actual amount. What is the sale amount? Sale amount is 5,29,496 is a sale amount. Okay. Now this is very clear. Next we need to write a loss. Loss on issue of debenture, that you know company pays premium. That is a loss to the company. 7 lakh into 5%. That is 35,000. 7 lakh into 5%, 35,000. Yes. Next remaining amount we need to transfer to general reserve. How to transfer it to general reserve? Debit credit side total is 7 lakh 35. So credit side is more than the debit side. Both the side total is 7 lakh 35. So from 7 lakh 35 deduct loss. From 7 lakh 35 deduct loss 10,806. Again deduct premium amount. Deduct premium amount 35,000. So remaining balance. Remaining balance is 6,89,194. That unutilized balance, remaining balance transferred to general reserve account. Yes. So very simple, only one account for 6 mark question. Yes. Any doubt regarding this you can ask me now. Yes, anything regarding this you can ask me. Yes, any doubt regarding this?